Okay. Joining us now in the after hours is Aspen Trading Dave Floyd. Dave, we were kind of chatting before we did our taping, and we thought you were in Aspen, but you actually tell us that you live in Bend, Oregon.
hmm Yeah, it's the
Yeah.
foreign exchange capital of the world that nobody knows about. Um, no, people's eyes glazed over if I have, even if I even consider telling them what I do. People are like, "Okay, you do what?"
Yeah,
So,
because Bend, Oregon, is it not the kind of a hippie place? Have I got it right?
is it a what place? I'm sorry.
A hippie place, a kind of
No,
uh,
no,
no.
it's actually not. No, but it's a very outdoors town, but not outdoors in the granola way, because I probably wouldn't be
Oh,
here if it was in that way. Outdoor in terms of like you get a lot of ex-Olympians here. Everybody's a mountain biker, everybody's a skier, everybody's a golfer. I mean, it's like this is like Lululemon's probably best area to sell clothing. Everybody runs around. Well, the ladies run around in the yoga pants all day, and everybody's got a Patagonia jacket on. That's Bend, Oregon,
okay.
Bend, Oregon, and
So, so are you a mountain biker and a skier?
I'm a huge mountain biker. Both my wife and I are. We literally are. Our house butts up against the national forest, so we literally drive out of our driveway on our mountain bikes, and we're on. I can't remember Phil. The mountain bike system here is called Phil's Trailhead, and it's nationally known. It's an amazing set of trails that go through the national forest, and that's literally a 3 minute bike ride from our house.
Well, that's
So
great.
that's what we do
I
in the
always
summer.
find
Yeah.
and I always find that you guys out west, we go skiing and we do some cat skiing in a group of guys, and I always can tell the people from out west because their idea of kind of going for it is just in another league, and the mountain bikers especially I find are just scary as hell. And when you talk to people that have grown up like mountain biking out west, they've always like broken major bones and they've had like a friend who's died and stuff. Like have you got horror stories like that to tell?
Oh, trust me, from my earlier years, I don't ride like that anymore. I ride aggressively, but I don't do all the jumps and stuff. But I was a avid BMX racer and mountain biker when I was younger, and I've got a broken femur, I've broken all my fingers, broken collarbone, broken jaw. I've got plenty of scars to prove it from mountain bike riding, dirt bike riding, and BMX.
There you
That's
go.
awesome.
That's what I would have thought. You fit the profile perfectly. Okay, and then in the winter, what do? Are you a downhill skier or do you do something else?
We used to downhill ski. Don't do it so much anymore. I mean, literally, the mountain's 15 minutes from our house. But we do skate skiing and a lot of snowshoeing. Skate skiing, for those that aren't aware, if you've probably seen it in the Olympics, it's the one where it's like hockey skating. And you guys are from Canada,
Yeah.
you know hockey. You're pushing your skis off to the side to propel yourself forward, just like you do with ice skates. You're just doing it with skis, and it's a great workout. You're doing it on a cross country trail, and we do that in the winter, and we do a lot of snowshoeing up through the mountains because the mountains here are just fantastic. There's tons of big open bowls that you can go up into. Some of them you need a snowmobile to get into, but yeah, great stuff to do. I mean, I'm outdoors just about every day for sure, whether it be snowshoeing and or skate skiing and mountain biking. I usually mountain bike every day during the summer.
So I
Dave.
was. Oh,
Oh,
sorry, Patrick. I'll let you go ahead, bud.
no, I was gonna say one of the things that I'm jealous of the West Coasters is the time zone thing. Like, I don't know, what time do you first of all wake up to start trading? Are you like a 4 in the morning kind of guy?
You get it. I love it. It's the best time for me because nobody bothers me at 4 in the morning. My family's sound asleep. Nobody in their right mind gets up at 4 in the morning,
Yeah,
unless you really love to be in the markets, and I do. So yeah, I get up at 4.
but yeah.
Yep.
No, so I'm saying that's amazing because to me, the fact that the markets are closing like at 1 o'clock and sometimes even by 10, 11 in the morning, the market's already more or less done all the moves of the day. You pretty much have your entire day ahead of you still. And the sun is out. Like out here, out east, sometimes like 4 or 5 o'clock, it's like I'm coming home and it's dark outside already. And it's like your day is done. I'm so jealous. I'm like seriously thinking of going out west just to change my lifestyle from around trading. I'm
Well,
jealous anyway.
no, you're right. I grew up back east. I come from Boston, and I couldn't go back there for a couple of reasons. Time zone for one. I also just like the attitude out here. There's this misconception that everybody on the West Coast is way too laid back. They smoke too much pot. Everybody's just way too this, way too
No, there's
that.
no stereotype like that.
Well, I guess nowadays it's okay to have that stereotype because you get to say, well, now it's legal, so get off my back. But what I like about it out here is that people work hard when they need to or when they're best suited to. And what I mean by that is, if you're tied to a desk 9 to 5, that may not be your optimal time to be your best in terms of working or whatever your pursuit is. I know my best times of the day. It's from 4 in the morning till 9 in the morning. And then I usually get another kick in the pants like around 7 at night till 10. That's when I like to work. I kind of barbell my day. And if I have to work like at 2 in the afternoon, it doesn't work for me. I'm just kind of spent. So West Coast people, it's not all about work, 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 work. It's like working when you're best suited and when you're going to be able to give it your best. And then I'll tell you what, getting out on a mountain bike ride or getting out on a skate ski or a snowshoe mid-morning, I come back from that, my brain's fresh, and I'm like, okay, now I can do analysis, and it's like a whole new session. I haven't been sitting in front of my screens for 6 hours and then said, okay, now I got to go through my charts again. No, I come back from that mountain bike ride, and my endorphins are up, and you see things a lot more clearly. And trust me, when I'm on my rides, that's when I come up with my best ideas, whether it be from a business standpoint or somehow the trade clicks for me. I'm like, oh, yeah. So it's really important to get out there. And I mean, I've got the ability to do it because I'm not living in a city.
Yeah, I'm jealous because I was just out in Vancouver and Calgary over the weekend doing a show, and I was up at 4 or 5 in the morning each morning because of the markets and do some webinars and stuff. And it's like suddenly I'm done everything by like 10, 11, 12 o'clock in the morning, and it's like I got the whole day ahead of me, and it's like this is. Anyway, I love it. That's it. I'm jealous. I'm jealous.
Vancouver, I got to tell you, for this is actually not only interesting, but given that you folks are, headquartered up in Canada, for the last 2 years, everything that has kind of come around in terms of opportunities, business-wise and relationship-wise for us, or for me here at Aspen Trading, has been from Canada. I have
Really.
One of my former clients approached me about a business venture, which we're now doing up in Canada. He's obviously Canadian. I've been working with a programmer who is based out of Montreal. I've got a couple of brokers that I work with at some of the big FX firms that have started working with us. And it's just really weird. And I've started spending more time in Vancouver, more time in Toronto, and I enjoy it immensely. I mean, it's such a different vibe, and especially up in Vancouver, holy cow, what an amazing city. If none of you have spent any time there, or anybody listening who hasn't, you got to get there. It's probably got to be the most magical city I've ever been to.
Yeah, it's really nice out there. That's for sure.
You were there one of the 7 days a year that it didn't rain?
Yeah, I tend to go up there in the summertime, and it's always just amazing. And we actually we always vacation up in the San Juans usually every summer. And this year we did on the Canadian side. We went to Salt Spring Island, which
that's beautiful. That's a beautiful area.
It is beautiful, and I'll tell you, the beer that I'm about to crack is.
Oh well, let's crack it. What are you drinking here? You had the big reveal.
Yeah. It is a beer. The company's called Driftwood Brewing. They're out of Victoria, Canada. And they make this IPA. I love IPAs. I love the big hoppy Northwest IPAs. And this one's called Fat Tug IPA. And I had it up on Salt Spring Island. And I was like, holy shit, this is the best IPA I've ever had. So I promptly bought 3 cases and brought it back across the border. And I'm rationing it out. So for the because I can't get
them to sponsor the show. We got to.
Yeah, that's right. We got to go. We got to. Someone from Salt Spring send us.
I would love for them to do that. But if anybody who's listening to this out in the Vancouver area, because I don't think their distribution's terribly wide, you got to have their IPA if you like it. It's just fantastic. I almost drank a little too much of it this summer while I was in Salt Spring Island, but that's a different story.
Did you guys rent a cottage, or what were you doing there?
We did an Airbnb for a week, and we basically did much of nothing other than,
awesome.
We hiked and we did stuff like that. But what was wonderful about Salt Spring Island is that it was like a throwback. Not everybody was on their phone. Everybody was relaxed. I mean, granted, most people were probably on vacation, but you could just tell that the island was kind of anti rushing around and trying to do a million different things. And I tell you, we got back to the States, via ferry. And the minute we got into the mainland in Anacortes, which is north of Seattle, it was just so palpably different. You're just like, oh, yeah, the metro feel again. It was just like, ah, shit. So, but yeah, Salt Spring Island, man, it's amazing. The whole San Juan Islands are
Yeah.
just amazing.
Well, and Victoria itself is, I think, one of the most underrated cities. I know everyone says that, only old people go there, but I love it. I think it's just, maybe it's because I'm
But
old.
you're old, so
yeah,
it
exactly.
doesn't freaking
I'm just
matter.
I'm ready to go there and retire because I love it. It's just a terrific city. I'm a huge fan.
It is a great city. I had a client of mine out of Toronto who, I don't know what the phrase he used was, but he said you're either, there was something about that age disparity. You're either really old or you're really young in Victoria. There was nothing in between. And again, this is just him passing along information. I don't know, but
Yeah.
I think it's a great city. I mean, coming in on the ferry into that city, that's wow, it's just amazing.
Yeah.
Yeah, no, it's beautiful.
It's beautiful
Oh,
there for sure.
Let's talk some markets. So,
Yeah.
well, actually, before we talk markets, can you talk any more about your venture with the Toronto guy, and what you guys are going to be doing? And
Sure.
can you? Yeah, I'm curious. Like, how did you meet him? What's your plan? Can you tell us his name and give us some more color? I'd love to hear it.
Yeah, no, I appreciate it. I mean, we don't have all of the details just yet, but I know exactly what we're going to be doing. What happened was, my buddy, well, he's my buddy now. We get along really well. His name's Amin, Amin, and he was a client of mine for 3 years on my research. And he was a great client. He was, sent emails. He was always inquisitive about, you could tell he was an aspiring trader. He really loved what he was doing. And literally like a year ago in November, so yeah, just about a year ago, he sent me an email. He says, I don't even know if you're going to want to entertain this. He goes, but I'm looking to leave my job at the bank. And I don't want to start a new venture from scratch because I'm not knowledgeable enough in this industry, but I'd really like to be able to partner with someone. And it kind of hit me at the right time because I was thinking, I want to have something outside of just the research business, something that's a little bit more scalable and can be, have a foundational piece put in place. And I was thinking, you know what, I'll talk to this guy. So we started talking. And he met me in New York when I went to speak at the Real Vision conference last February. Liked the guy. We had way too much wine one night, the first night I met him, and we just hit it off. And, ever since then, we've just been talking about it. And what it's evolved to at this point is we're going to set up a money management firm that is going to execute the trades that we do in the research and also put in there kind of an automated asset allocation model. So what we're going to be doing is basically allocating about 70% of a client's account into a very simple asset allocation model, stocks, bonds, in various percentages. And that'll be adjusted twice a month.
Predominantly through ETFs?
Yeah, we're only using 3 ETFs. We're keeping it super simple. Can't really go into the details of it, but again, nothing complex. We're not going to own like 20 different ETFs in 20 different sectors. None of that nonsense. Very, very simple. And then we're going to take that other 30% of cash and use it with these tactical trades. So we're going to always be quasi long the market in various, proportions. We might be more long fixed income. We might be long higher beta or less higher beta. And then we're going to use the trades in the FX market, 10-year notes, S&P futures, in the occasional stock to kind of give that additional return that hopefully pushes us well above the benchmark. So we're going to be rolling that out. We're actually literally in the process of setting up the Canadian entity, as we speak. We hope to have it up in January, and we hope to be opening the doors sometime late January, early February. And Amin's mainly going to be, at least initially, he's going to be kind of on the asset gathering side, but he knows markets. He can talk markets, really, really well. And then he's going to kind of continue to learn through our interaction how to kind of really get better at the craft and start contributing on a strategic, on a tactical basis. So, it's going to be good. We've got a lot of good relationships in place. What we're trying to do is build something that is, scalable and can become big and kind of have the research that we do here at Aspen basically find another home over there, or basically fuel another entity, basically.
All right.
Well,
Well,
that's
listen,
great.
let's talk S&P 500.
Mm-hmm.
I mean, you trade the SPOOs, but no charts on the chart deck about SPOOs. So you got to tell me, what do you think's going on here in the S&P? Are we going higher here?
We are going higher, and I'll tell you what, I'm going to sound really simplistic here, but I look at this chart that's up right here, and I'm just thinking, I'm going to sound like a complete moron, but just buy the goddamn dips. The market's not going lower. I mean, there's nothing on the horizon that suggests we're going lower, and the tendency, at least into the end of this year, is from a seasonal perspective, we're going higher. I think once we get above this 3160, forget about it. In fact, I think
Where did your Elliott wave and extensions all lead to? Are we going 33, 3400 in your mind, or like where's your measurement go to?
Well, I'm glad you asked that, because I got to be honest with you. When you look at that chart, for me, I get really, on a longer term time frame like this, I have a really hard time labeling it. It seems like almost a waste of time, because all the damn things tends to do is go up. So I'm keeping a very tactical approach. I mean, yes, I have long exposure in my own portfolio, but from a trading perspective, I'm largely ignoring a lot of the previous price action. I'm just trying to focus on what's happening right now. And so, yeah, I mean, I think, 3,200, 3,300, that's certainly within reason. I'm going to go
Yeah.
out. I'll go out to the end of the year, and I think once we eclipse 3160, my sense is that the market, meaning money managers and whatnot, are probably not long enough, and they are not going to want to deviate from their benchmarks too much. I think we're going to have a melt up into the end of the year. That's how
There
I
you
see it.
go. And now, hold on a second, because I
One
have to
second.
turn this. I'm going to turn this around on Kevin here, because
What?
Kev, I have a feeling that you're going to give me a prairie dog here. Are you on the other
Well,
side of
no,
this? Are you?
no, I don't. I actually think Dave could very well be correct there. I'm not going to
Yeah.
say that we're going to prairie dog for sure there. This thing has got a lot of momentum, and there's still a lot of people that have underinvested. But Dave, I have a question for you. You've been in the market a long time. And this summer, you kind of alluded to it, the fact that we had a little bit of a scare with the yield curve inversion. And I would
Yep.
say that it was more than a scare. I was flabbergasted at how the financial community talked themselves into believing that a recession was just around the corner. And I was wondering if you've
I still
ever
talked myself into that. by
yeah,
the
well,
way.
you always think there's a recession coming around just around the corner. Have you ever seen a situation where it has flipped so violently and so adamantly and convinced so many people, only for them to be proven wrong? Like, to me, it's astounding how many people were looking for that recession, and it's like almost like they created the inversion of the yield curve themselves.
No, I think it's a really good point. And I mean, I think it's on some level, it's a logical conclusion to draw because of where we are in the business cycle. I mean, we're 10 plus years into this. I mean, uncharted territory for sure. Um, but I think what a lot of people didn't realize, and again, I'm not to say I was, I was leaning towards that at one point. I'm like, yeah, yield curve inversion, not good. And then when you really started digging into it from a quantitative standpoint, not all parts of the curve were inverted. And I don't remember the exact details at this time, but after kind of digging around a little bit, I'm thinking, you know what? Not this is not what most recessions have evolved from, at least in terms of the yield curve. And there's another chart I should have sent over, and I don't know if you've got your Bloomberg terminal up, but I'm always looking at the spread between high yield and investment grade corporates and the spread between those. And it's like clockwork. As that spread continues to decrease, the S&Ps continue to move higher. Well, that spread is continuing to decrease, and that has been like basically like money, so to speak, for a very long time. So until that changes in my book, the S&Ps are going to go higher. But going back to what you were saying, it's also the kind of the news cycle we live in nowadays. I mean, it doesn't seem as though most news, whether it be on the political front or the economic front, there doesn't seem to be a really good deep dive understanding and analysis of what people are talking about. It's like, oh my God, this will make for great headlines and be great for ratings. And
Right. But I think it
that
was
might just
even
be it.
I think that it's actually the financial news kind of within ourselves, like even like the podcasts, Twitter, all these things, we almost feed upon it ourselves. And I think that you look at what happened in the Eurodollar market. I think some big hedge funds just kept pushing and pushing, and as it went higher, they convinced themselves, oh, that there was a recession coming because there's the curves inverting. But the reality is that they're the ones inverting the curve.
Oh.
And not only that, we never had a curve invert, with them lowering rates, which is what happened. And I guess I don't want to sit around and say that it was an easy trade by any means, because as you're getting run over with all this kind of recession talk and stuff, I just kind of just shocked at how much the financial community is convinced, like almost like to the point where people are telling you you're a fool if you don't believe this. And you should have seen, like, I got bearish on bonds, and you should have seen the hate mail that I got. Like, it was just
Half it was for me.
Yeah. And I think the world's changed. I think it's kind of funny, because I think that a lot of ways, to some extent, guys like you that are just trading the charts is what you have to do, because the reality is that the fundamental guys are talking themselves into things that aren't even true.
Well, I think, it's one of the challenges of fundamental analysis. It's a horrible timing tool. You can spin a nice story, but if the price action doesn't really support it's just that, a nice story. One of the things we didn't talk about, and I think it kind of dovetails into what you're talking about, is that there's too much information out there. It's ubiquitous. Everybody with an internet feed can get not only nonstop opinions about the market, but also nonstop data. And I think on some level, it's actually harmful unless you know how to kind of sift through it or tune it out. But it is interesting that what you brought up, I actually hadn't really thought of it, about how wrong that was. And I think that leads to why I still think people are not positioned properly going into year end, which is why I think at minimum S&Ps end up higher than where they are right now. What happens in 2020, that's harder to know, because Trump could say something, maybe the economy finally does sputter, but I don't know, it just doesn't look like it's doing it, at least at this point in time.
I like to give Patrick a hard time about his technical analysis. I call it voodoo magic and the dark arts and stuff like that.
Dark
magic.
The dark arts.
But the reality is that if you go look at the true legends of the hedge fund community, guys like Paul Tudor Jones, they made their money by following charts. And the fundamental guys that just sit there and try to tell you that it has to be such because they know the answer are oftentimes not the people you should be listening to, because at the end of the day, the price action is all that matters. We can all have opinions about where we think it's going fundamentally, but the price action is actually the true arbiter of what's going to happen. And I'm sympathetic to the idea that more and more people should probably start doing more technical analysis. And I saw something
They'll ruin it for everybody.
Yeah,
no,
I saw something Tudor Jones said something about this the other day, that there's not enough people that are doing that, and that they're going to get killed in the next market correction because nobody knows how to read a chart anymore. Anyways, I thought that was interesting.
I will push back on that, Kev, because I believe the market. Look, if you think about order flow and you think about how we all participate in the markets, if everyone started to do the same thing, it would stop working, and you don't want actually everyone doing it. It's like modern portfolio theory. It's like once everybody starts diversifying and following all of it, then all of it stops working the same way that it was intended to work, because all of the money is all crowded into the one way. I just think that technical analysis is a phenomenal tool, but it shouldn't be that everyone should be using it, because it would ruin it for us that are using it.
There we go. Patrick wants to save it for himself.
No, but you know what? It's just you need to have an edge, and it's better the more people don't know about it. And anyway, but listen, I want to push back. Stop for a second. I want to go back to this, okay? Because I'm tired of you shitting on the fucking yield curve for a second.
He's talking to me, David. He's talking to me, not you. Don't worry.
I'm talking to Kevin. Well, and you know what? Listen, we'll throw Dave in here. Why not? Yeah. He's almost Canadian. You know, like but listen. All right, like you're trying to like talk about everyone calling recession, but look, in 2006, it was 2005. Sorry, not 2006. The yield curve started to invert, and then you had it steepening a little bit right over here at the start of 2006. And this, I'm envisioning hearing someone spewing the shit that came from your mouth right there. Right? Like, and yes, you know what? It continues to flatten and it continues to do nothing for an entire year. But there's no market timing to the yield curve. Just because it inverted and everyone was crying for recession, just because they thought the recession would start next week and it didn't, doesn't make it less valid. This is a thing that happens over multiple years, and we've only saw the inversion begin. Like, I mean, we could be in 2021 still talking about the steepener. I just think that you guys are not you guys. You know, like as far as I'm concerned, you know what? Yes, we've had this steepening starting, and but I honestly think it could still be like it doesn't mean that a recession has to start next week or next month, and that anyone who called it there is wrong. It's just, I think that if you were actually believing just because we had an inversion that a recession was imminent, that's the mistaken assumption, isn't it?
Well, yeah, but those people went and bought long bonds and sold their stocks on all the kind of the hype in the news media or in the blogosphere of the yield curve inverting this summer. Patrick, remember the reach for yield? It was, unbelievable.
It was.
And people were selling their stocks and trying to lock it in, and meanwhile stocks have raised higher and bonds are down. Like how you like them apples? Like that's not working for you. So yeah, maybe we're still going to have a recession in a year or two. The reality is that nobody knows, because we don't know what the Fed and what the economy is going to do and what the fiscal policy will be. But I guess I just wanted to comment about, get Dave's opinion about how the world has changed, because the last time we had a yield curve inversion, probably nobody talked about it. Or like there was like 7 guys on Wall Street that might have mentioned it. But it's like
maybe 6.
No, really. Yeah, like it's something that's gone from just a few, people watching it to something that's on the front page of every, news headline. And here's something for you, Dave, as well. Like I found that the internet has been a great tool for helping people learn about trading and finance, but it also has been a great tool for the people that have just been peddling kind of fear. And I think there's a very famous, website that makes a lot of money off of doing that. And that website, although it's entertaining, it probably hasn't helped you very much.
No, it hasn't. I mean, God, we could go so many directions with those 3 bullet points alone, but I'll just touch upon them briefly. But yeah, too much information, too much bearish information can be harmful. And you've got a lot of other people out there, masquerading as quote unquote professionals, just slinging a lot of shit around. A guy who steps off a private plane and says he has 3 simple chart patterns comes to mind, but I don't know. I don't want to really go there. But, going back to the yield curve thing, you're right. The average start of the recession is a year or more out after the yield curve inverts. So you're absolutely right that we could still be in a recession by the end of 2020. And, who knows? Maybe we are. This is what you have to do as a trader. You got to start looking for the clues down the road, using the technical analysis, using all the other things you can look at, quantitative analysis, common sense. I would say regarding the charts, and I know I'm just kind of hopping around here, but I'm kind of briefly touching upon those bullet points you guys were chatting about. the nice thing about, even if more people were to start using technical analysis, everybody's going to use it in their own subjective way because it's not completely A, B, and C or black and white. So if anything, it might end up causing some distortions that a trained set of eyes might actually be able to take advantage of.
For sure. I agree with you there. And it's like the same thing with indexing. Indexing at its extreme doesn't work, right? Like the reality is that if everybody indexed, there would be nobody pricing in individual securities, and therefore the market would break down. But as more people index, this is my point about indexing, is that I kind of push back and say, as these people index, it gives the fundamental investor much more opportunity. It's all of a sudden those stocks that aren't part of the index are cheaper. So if you're a long-term investor, oh, sorry, Patrick's going to push back again. Go ahead, Patrick.
No, all I'm just saying is that all you're identifying is that there's value stocks out there, and shit's going to be cheap.
No,
but
if you're truly a long-term, truly a long-term investor, Patrick,
dude,
you're going
to be dead in 20 years. No, just kidding. I'm not saying it.
No, but honestly,
how long is long-term?
No, but like if you're an allocator of long-term money, like if you're a pension fund, you should be happy that you should be going out and picking active managers now, because as more people index, it makes it easier for the active managers to pick up cheap stocks.
I completely agree.
Yeah, like you're from Bend. One of Jesse Felder's there. You guys must hang out together at the bar.
I know Jesse. Yep.
Yeah, you're the only two finance guys in Bend probably. But I go back to he had a great point that I thought was just so smart, and he talked about the fact that if what is it? I guess if you're a founding if you start a company and you're a founding shareholder with a large percentage, then oftentimes you're not eligible for the index. So you're somebody that owns 30% of a company and you're running the company for yourself, but it's the other 70% is public in the public markets, then you're not eligible for the index. So those stocks are trading now at a discount because basically they're not getting the buying from the indexes. But the thing is that if you look at the long-term kind of founding shareholders' actual economic performance or business performance of founders as CEOs, they actually outperform over the long run. So Jesse came up with this list of 20 stocks or something that have founding shareholders that trade, that are public, and that these things trade. And he's like, I'm going to buy these. And I thought that was the most brilliant idea. And I thought to myself, this is the kind of stuff that occurs when you get distortions from too much indexing. And I'm just like, bring it on, because smart guys like Jesse are going to figure out ways to make money even with when everybody else is chasing something.
Absolutely right. There's always an opportunity somewhere. It's just the inquisitive and the curious will sniff it out. You guys were talking about Paul Tudor Jones a while ago. That guy still actively trades the book pretty much every day. One of my clients, oddly enough, he used to work for Paul Tudor Jones. He's at Citadel now, and he gets my research, which blew me away. I was like, wow, my research is at Citadel in London? Wow, fantastic. And I had coffee with him while I was out there, and he's like, oh, yeah, that guy trades every day. He's actively part of the book. And right. Because that's how he defines his edge, by being in there and finding those anomalies. And there's always going to be guys and gals like that out there that are going to figure out how to generate alpha, for sure.
Right. And to be fair to Paul, like, I don't know about you guys, but I would be 75 years old. I still want to be trading. It's kind of like what I always was meant to do.
It's in all of our blood. I'm pretty sure for all three of us, it's like, I don't know that when I'm on vacation and I can't watch the markets, I feel disconnected. That's like unplugging me from the matrix. It's like, I feel like I start getting itchy on the skin. I don't know what to do with myself. I need to refresh the quote screen.
No, I'm with you. It sounds like we're all in the same boat. I love what I do. It doesn't feel like work. And when I'm away from it, like sometimes I'm like, Jesus, is it Monday yet? Or Sunday afternoon. Is it Sunday afternoon yet? So.
Yeah,
okay. Well, Dave, we should probably let you go do some of your cross-country skiing. And I just want to, we'll give people another chance to, why don't you tell everyone where they can find you and learn more about what you offer. And thank you again for joining us.
Yeah, sure. Well, I just encourage everybody to come by the website at aspentrading.com. You'll see a big intro offer opportunity right there if you want to get 30 days of our research to see what we are all about. One of the things that we do really well, is we're transparent. All of our trades are listed there. So there's no magic to what we do. We just do a really good job at technical analysis and quantitative. So if you're looking to kind of get trades and research fed to you so that you understand the process, maybe make 4 or 6 trades a month, we're probably the firm you should be taking a look at. And we're good guys. We're fun. So, you should definitely come by and check out the website and sign up.
And Dave, next time you're in Toronto, give us a big heads up, and we'll do a shout out at the show to do a market huddle meetup, and we'll go for beers.
I would love to do that, and I will. And there's no doubt that I'll probably be in Toronto in January or February for sure. So I'll give you a heads up. Try to make sure it's warm, like not super blistering on there.
Oh, good luck with that.
Yeah, I know. All right, gents, have a great weekend. I really appreciate it.
All right.
Thanks again for coming on, Dave. Take care.
Thanks, Dave.
Bye-bye.